Looks like it's not just Canadian homeowners getting squeezed anymore, it's the big boys. Over 40% of Canadian real estate funds are blocking investor withdrawals. Now, let me explain how this even happens. So there's people that invest in private real estate investment companies. These large, they're not little, they're like multi-billion dollar in many cases, but there are a bunch in the 50 million to multi-billion dollar range. You invest your money in these companies and they deploy that money in real estate, different kinds of real estate, different asset classes, different types of buildings and whatnot. The idea is that they're going to give you a return on your money. So you put $200,000 in and they're providing some form of return. Whatever that is, it's different for every fund and every asset class. The problem here is investing in real estate, unlike stocks, is a little bit tricky because real estate is not a liquid asset. If you invest in stocks and the market goes down and you want out, you just sell your stocks. You can do it right away. In real estate, you can't do that. And now homeowners have been feeling that because a lot of people's homes are actually worth less than they paid. And worse than that, a lot of people's homes are worth less than the mortgage they still owe, which means they can't get out of their home. Well, that's happening now with these investors. So what's happened here in many cases is a lot of these real estate investment companies have over leveraged. So they've bought buildings and properties at very high prices when the market was at the top. And they also used a lot of leverage. So a lot of debt, very little equity. So as the market's been coming down and down and down and down, it's creating this issue where they've lost almost all liquidity. They cannot sell even if they wanted to. So when their investors see the market declining and say, I want out, the story is so sad, too bad, it can't get you out. And that's exactly what is happening. This means investors' money is stuck and these companies are stuck in these assets that are no longer profitable. This is a big indicator of potentially a larger failure to come. So this is not just happening anymore with residential homes. This is happening at an institutional scale. So what does this mean for you? If you have never invested in a real estate fund before, this is your warning sign. When you do, make sure you really understand the underlying asset. What are they investing in? How do they structure their financing? How much debt do they take on? How much equity do they put in? What is the model? Because if you ever get into a scenario like this, or you've invested in a company that is super over leveraged that cannot survive a downturn, you're going to feel it on the other side. And this is why it's so important in real estate to never buy a deal for a hope of appreciation, to like one day it'll be worth more. In real estate, the way you make money is you buy deals that cash flow now. They work now as they are. They cash flow, they pay you. Even if the value of the property went down, it still cash flows, it still pays you. And to do your deals with more equity and less debt, having these, like, honestly, these new CMHC programs at 5% down terrify me. I'd much rather do an industrial storage deal with 40% down and only 60% leverage. That saves you in cases like this. So if you're an investor, be careful where you put your money so this doesn't happen to you.